Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thank you for joining us. We've got a lot of deals to announce this week, so let's dive right in. As we reported here 2 weeks ago, ACV Auctions is about to go public via IPO. ACV expects to raise approximately $314 million in their initial public offering, which is set for next week on March 24th. The IPO would give it a market value of $3.1 billion. ACV is offering 16.55 million shares of Class A common stock. It plans to list its shares on the NASDAQ stock market under the ticker ACVA. In the filing, ACV estimates the IPO price will be between $18 and $20 per share. Since its inception back in 2014, ACV has facilitated over 750,000 wholesale transactions between over 21,000 dealers and commercial partners. ACV was founded in 2014 and achieved $208 million in revenue in 2020. ACV is bound to be one of the year's most exciting deals in the automotive space. As we announced last week, Carpe Capital was raising money. This week, the company announced that it has closed the $8.8 million Series A funding round. The company has developed a proprietary web-based platform to give every dealer partner the power to approve 100% of their consumers, regardless of their credit history. The funding round was led by FM Capital, with participation from more than 50 individual and institutional investors, including Automotive Ventures and Medalist Partners. Carpe Capital launched operations with a select group of beta dealers. The company said it will now roll out to a broader group of dealer partners in the coming weeks. Car Global has announced a $15 million Series A investment in artificial intelligence solution for vehicle inspections company RAVIN.AI. This comes after the January 5th news that competitor Manheim acquired AI data imaging company Fyusion. Clearly, vehicle imaging and damage detection is a hot space right now. RAVIN's existing investors, Pico Venture Partners and FM Capital, also participated in the round. To date, RAVIN has raised approximately $25 million. Other investors in the company include Shell Ventures and individual investors such as General Motors' former CEO, Rick Wagoner. Cruze, a majority-owned subsidiary of General Motors, will acquire self-driving startup Voyage in another major autonomous vehicle merger. Cruze mainly operates in autonomous vehicles in dense urban areas like downtown San Francisco, while Voyage oversees a fleet of low-speed autonomous vehicles providing trips to residents of several retirement communities. Both companies have tested their vehicles without a safety driver behind the wheel and aspire to launch full-fledged commercial robot taxi services. There was some exciting action this week in the digital retailing space. NASDAQ listed Upstart Holdings, a leading artificial intelligence or AI lending platform, announced it has entered into a definitive agreement to acquire digital retailing software company Prodigy Software. Details of the transaction were not announced. Word on the street is that another digital retailing software company may have M&A news later this year. Carpe, a loan management software company focused on buy here, pay here dealers, closed on a Series A round, bringing the total raise to $9.9 million. The round was led by Automotive Ventures, with additional participation from Social Leverage, Amplify.la, Pipeline Capital, and FJ Labs. The buy here, pay here segment makes up about $100 billion of America's outstanding auto debt. Where Carpe comes into this asset class is in two ways. First, Carpe's loan management software helps buy here, pay here dealers manage their loan portfolios and keep delinquencies under control. It helps get late customers caught up and prevent others from falling behind by making it easier for the borrowers to pay for and manage their auto loans themselves. Second, Carpe Credit, launching in Q2 of this year, will give buy here, pay here dealers a line of credit secured by their loan portfolio so they can stock their lot full of cars and keep issuing more credit to more of these consumers. Spurion announced the acquisition of the LoJack Corporation's stolen vehicle recovery business from CalAmp. The integration of the LoJack US business bolsters Spurion's position as the leading provider of aftermarket telematics for automotive dealers, while supporting CalAmp's focus on a strategic global software as a service initiatives. Congratulations goes out to both Kevin Weiss and Brian Scott at Spurion for getting this deal done. Refraction AI has raised a $4.2 million seed round. With an initial prototype built on a bicycle foundation, the company's Rev1 robot is designed to operate in bike lanes and roads rather than the standard sidewalk bot. The different approach allows the robot to travel at higher speeds, topping out at 15 miles per hour, and remove some of the messy pedestrian dodging issues that come with sidewalk use, while introducing some new ones on that narrow sliver of asphalt shared by cyclists. Swedish battery maker Northvolt has acquired US startup Kuberg, gaining access to technology that could significantly boost the range of its electric vehicle batteries, in the latest move in a race between upstart battery makers and established ones to gain a competitive edge. The deal comes as Europe becomes a focus for the industry, with Asia's big dominant battery makers competing against Europe's homegrown startups to supply automakers such as Volkswagen, Stellantis, BMW Group, and Daimler with the batteries they will need to power millions of electric cars. Optibus, an Australia-based startup that provides a platform to analyze how vehicles and people move around in cities, and then provides navigation, scheduling, driver rostering, and other guidance for mass transportation providers to service those cities better, has raised a $107 million Series C round. The company is not disclosing its valuation, but CEO and co-founder Amos Hagag confirmed that it's gone up 4 times since its last round in 2018. The valuation is likely between $400 million and $500 million. Dutch solar electric vehicle maker Lightyear says it will bring its first car to market at the end of this year, following a $48 million injection of capital. The Lightyear 1, as their first model is called, differs from ordinary EVs in that it has built-in solar panels, which the company says adds an extra 12 kilometers of range for every hour they are in use. This means that in sunny areas, the car can be used sporadically for long periods without being plugged into an external electricity supply. The company says that Lightyear 1 will have an exceptional range of up to 725 kilometers thanks to the built-in solar panels. It says it will be able to recharge from its own solar roof up to 80% of the annual yield for an average driver in San Francisco. Rumble On and RideNow Power Sports have announced a definitive agreement to combine companies. The combination forms the first omni-channel customer experience in power sports in North America. The $575 million RideNow purchase price is to be paid $400 million in cash and $175 million in Rumble On Class B common stock. Up to $280 million of cash consideration to be funded via new debt financing committed by funds managed by Oaktree Capital Management. The pro forma company has sold more than 63,000 vehicles in 2020, generating revenue of approximately $1.3 billion, net income of approximately $65 million, and adjusted EBITDA of approximately $91 million. Zigo, the insurtech that got its start by offering flexible motorbike insurance for gig economy workers, but has since expanded with a range of tech-enabled commercial motor insurance products, has raised $150 million. Leading the London-based company's C round, giving it a $1.1 billion valuation and unicorn status, is DST Global. Other new backers include General Catalyst. Zigo has now raised more than $200 million since launching in 2016. The insurance company says it will use the funding to rapidly expand across Europe and beyond. It will also double its workforce, which currently stands at 265 employees, to over 500 employees total by the end of 2021, and continue to invest in technology. Zigo offers commercial motor insurance for businesses, from self-employed drivers and riders to fleets of vehicles, spanning pay-as-you-go insurance to annual policies. It combines tech with multiple data sources to offer insurance products that it claims saves time and are more cost-effective. It earned its own insurance license in 2019, enabling it to build and sell its own policies, in addition to working alongside other insurers. Via Transportation has acquired mapping software maker Remix for about $100 million as the company seeks a larger slice of the new market, bringing together ride-sharing and public transportation. The deal is the third acquisition over the past several months for Via, which is bidding to play a central role as cities, transportation authorities, and universities recalibrate their transportation offerings in the wake of the coronavirus pandemic. Remix, which was founded in 2014, has software that uses data to help cities plan their transportation routes and make decisions on such things as where to put one-way streets, bike lanes, or special lanes for emergency services. Remix investors cashing out as part of this deal include venture capital firm Sequoia Capital and Y Combinator. Wejo is closing in on a deal to go public through a reverse merger with a blank check company that would value the British connected car startup at more than $2 billion. Wejo, which organizes data from about 15 million connected vehicles for such clients as GM, Hyundai, and Daimler, is still working to finalize a deal with a SPAC. Wejo estimates that by 2030, 72 million new vehicles sold worldwide will be connected, creating an opportunity for revenue streams and more services for automakers and their customers, as well as greater efficiency for companies in product development. Wejo's technology platform called Adapt allows automakers to organize the data collected in those vehicles. So let's get on to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday Five to share some of those companies each week with you. Today our companies to watch are Vintel and Recall Rabbit. Our first company to watch is Vintel by VinLogix, which was founded in 2014 and is located in St. Charles, Missouri. Vintel aims to be the standard for automotive diagnostic reporting. VinLogix is an innovative hardware solution provider that administers secure remote asset authentication via custom-embedded machine-to-machine devices and integrated data sharing services with cloud capabilities. Vintel brings an integrated, standard diagnostic solution for real-time critical vehicle health, diagnostic, emissions, and reset information that is utilized throughout the automotive industry. Our second company to watch today is Recall Rabbit. Recall Rabbit was founded in 2018 in Austin, Texas by Stephen Granger. Recall Rabbit is trying to help solve the automotive recall problem facing dealers. 1 in 4 cars in the US has a recall that needs to be repaired, which equates to over 64 million cars that need to be fixed. A number of those are sitting on car dealers' lots for sale. The average cost of a recall is $548, which equates to over $31.5 billion worth of revenue sitting out there waiting for dealers to capture. Recall Rabbit helps dealers connect to fix recalls on used inventory. They're kind of like the Match.com for dealers and recalls. The Recall Rabbit technology helps dealers connect to solve the recall issues they have on their used inventory. Dealers get a few benefits from the Recall Rabbit service, including, first, they get more ROs and get consistent work every week in their service bays. Second, they receive increased ROI as dealers are able to tap into a totally unique untapped source of revenue. And finally, dealers only pay for results, unlike a lot of other services. Recall Rabbit is creating a marketplace that will help dealers resolve recall issues and provide a better product for their customers. So that's your weekly Friday Five, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space with a ton of deals going on. Make sure you stay tuned in each week to stay up to date on the auto industry's technology M&A activity. I'll keep my fingers on the pulse of deals being done so I can share updates each week with you. If you're an early-stage automotive tech entrepreneur looking to raise money, or an entrepreneur who wants to chat about the best timing and process to sell your company to achieve the best outcome, I'd love to discuss with you. Thank you for tuning in to the CBT News for this week's Friday Five, and we'll see you next week.
Thanks for joining us for another edition of the Friday Five.